Hello, everybody. This is Sunko, the Korean bro. Today is 2022, May 21st, Saturday night. And let's read articles, okay? Yahoo Finance and Market Beat. Let's see. Russia stopped gas flows to Finland over payments dispute, inflation linked to the supply chain. Former Home Depot CEO says. How to remove your information from Google search. Larry Summers called inflation. Here's what he sees next. Recent Jeff Bezos tweets prompt speculation over potential political stocks. 7 hot takers on Yahoo Finance right now. It's a horribly challenging environment. There's some good news in the market sell-off. Yes, Nvidia stock is expensive, but Oppenheimer says it's worth the price. Billionaire Ray Dalio pulled the trigger on these two strong buy stocks. A bear market rally could be. Investors should sell any risk, says Bank of America. The bear nears exit stocks until the S&P sinks to 3,000. Which top performing dividend stocks look most attractive? Well, I'm not worried about the stock market crash. Meta and 2 other internet stocks to buy after the big market drop. The stock market has avoided a bear, but the sell-off isn't over. Here's the real reason the stock market is coming unglued. And it isn't because of weak earnings. Robinhood investors are going to get their heads handed to them. A stock on the verge of bear market. The 5 best Bitcoin stocks and crypto plays to buy and watch. Applied Materials earnings disappointed. Why Wall Street remains optimistic on the stock. The shipping stock has soared. It's about to pay a 14% dividend yield. Robinhood and the 4 other broken IPOs they could be buys. Watch out if you're a male over 45 and think you know about investing. How to generate $100,000 of retirement income without selling principal. After big pullback, it's time to shop for Walmart stocks. Goldman Sachs 4 buy rated stocks for the rest of 2022 with up to 101% upside. Wall Street is as baffled by stocks now as it has ever been. Buy the deep or sell the rip. What's ahead for stock investors? As sticky inflation fears heightening consumer concern. Analysts downgrade, which says investors want to see growth. Tesla supplier Livent leads 5 stocks with these 2 winning traits. It may be a bear market, but it's not a panic. That's worrisome. Fund wins with focus on rising dividends, stable stocks. Stock market rally under pressure is warmer. Target crash on inflation woes. Weekly review. Why on earth did Warren Buffett swap Wells Fargo for Citigroup? You can trade and invest in Palo Alto Networks. Here's how. Kathy Wood watched Roku's options Tesla as ARK's #1 holding. North dropped Grumman and 5 more companies that raised their dividend this week. Buffett is bullish on Carvana business model despite macro headwinds. The battle over Spirit Airlines and how to play it. Bull market near-death experiences are weirdly common in history. Crypto might have an insider trading problem. Don't be in a rush to invest in Cisco. Okay, one by one. The first article we have tonight is inflation is inseparably linked to the supply chain. Former Home Depot CEO says inflation appears to be spilling into all parts of the economy, with one primary reason being ongoing supply chain constraints. Inflation is inseparably linked to the supply chain. Former Home Depot CEO Bob Nardali told Yahoo Finance Live. I look at a global view of the container ships around the world, and we have well over 550 ships right now floating on the water, waiting to get unloaded. We have an equal number of tankers floating on the water, ready to get unloaded. The pandemic created the perfect storm to disrupt supply chains. Port backups, container shortages, and other supply chain nightmares meant that retailers and brands were largely put at the mercy of forces outside their control. Supply chain has caught every company off guard here. I just don't see it getting better. Nadali said. I think we're in for a long, rough patch. Certainly through the balance of this year until we get stability back in the supply chain. Hmm. Unbelievable challenges in China. China holds the cards for the global supply chain as a severe COVID 19 lockdown in Shanghai lasting more than 2 months, maybe coming to a gradual end. A fifth of the world's container ships are stuck in congested ports. According to One World data, and a quarter of those stock ships are at Chinese ports. Since February, the number of container vessels waiting outside of Chinese ports has risen by 195%. Additionally, shipping one container from China to the West Coast now costs roughly twice as much as it did a year earlier. Research from Rasni found with 344 ships stopped at the Shanghai port, the 34% increase since March. If you think about the city they shut down in China, you got 26 million people, fourth largest port in the world, and we're not moving product in to get manufactured, and we're not moving product out on the supply chain. We've got a real challenge here globally in our economy or business, and I've never seen the challenges for a CEO greater than they are today. The broad range of constituents that they have to try and satisfy is unbelievable. Unbelievable to date. Hmm. So, what he says is inflation is inseparably linked to supply chain issue. Hmm. It's mainly interlinked. Meanwhile, Home Depot seems to be weathering this challenge surprisingly well. Hmm. The home improvement retail giant reported better than expected earnings. Hmm. Sales rose nearly 4% from a year ago to $38.9 billion and were the highest ever for the first quarter in the company's history. Current CEO Tad Decker noted on the earnings call. Home Depot said Tuesday it expects revenue to rise 3% this year after a strong start. It's the latest sign consumers are absorbing higher prices after retail sales jumped 0.9% last month and were revised higher for March. So although we have inflation and supply chain issues, Home Depot is doing surprisingly well, even if they've got a lot of issues going on. Larry Summers called inflation. Here's what he sees next. Okay, let's see what he says. Larry Summers, the guy, was right about inflation. Then what does he see happening next? That's what I asked myself as I prepared to speak with the noted public facing economist this past Thursday. As you may know, early last year, Summers sounded the alarm about President Biden's $1.9 trillion American Rescue Plan, saying it was the least responsible economic policy in 40 years and that it could engender significant and persistent inflation. Okay, he um he was expecting to have this kind of inflation a year ago, and now it's really happening. And let's see what he says next, because he was right at that time, right? Um, if he can guess, well, let's see if he can get it right this time, right? That's what it's basically saying. Turns out Summers, a self described progressive, was right. More on what Summers saw that others missed in a second, but at first I want to focus on that last political point because Summers was essentially calling out his own party, which maybe isn't surprising. Summers, as I sure you know, is not only the whip smart former Treasury Secretary and a former president of Harvard. He's also known to be a candid, sometimes at the expense of people's feelings. A fair trade, I say. You want a sycophant by a dog. You want an economist who bars no holds, calls summers. You know. Uh, I know a few individuals on planet Earth who possess a greater wealth of knowledge at their disposal, which they can share by more caution, often draw means that he does. Blah blah blah. Okay, skip. Okay, because there's a lot to read. 7 hot tickers in Yahoo Finance right now. So what are these 7 hot tickers? China EV makers, Neo, Rose Stores, Foot Locker. Hmm. It's a horribly challenging environment, expert says. Earnings results from Target and Walmart show how retailers are feeling the sting of inflation and supply chain issues. Okay, Target and Walmart, they're all facing supply chain issues. Hmm. And it's not so good. The condition is not so good, and they are going through a hard time. It's a horribly challenging environment. Here it says horribly challenging. Um, Stephen Lamer, CEO of the American Apparel and Footwear Association, an industry trade group, told Yahoo Finance, um, the supply chain complications are extraordinary. Hmm. On top of that, there's inflationary pressures really coming from everywhere. It's materials, labor, freight, energy. Both Target and Walmart reported earnings misses this week as higher cost ate into the retailers' profit margins. Um, and discretionary spending decreased. On top of escalating expenses for things like labor and fuel, both retailers were caught off guard and were carrying higher levels of inventory than usual. By the end of the first quarter, Walmart's inventory was at $61.2 billion, about a third higher than a year ago, while Target's inventory surged 8.5% from the previous quarter and 43% from a year earlier. The current problems are rooted in the supply chain bottlenecks retailers faced last year, which left them scrambling to secure goods. There's a lot of inventory build, Lamar explained, and that was actually a strategy the companies used to manage last year's supply chain crisis. Uh, that title just pops up into my head, just out of nowhere. Because every time I do YouTube live, I've got to come up with some title, and there was not much left. Uh, in my head, so I'm like, okay, why not 돈의속성 주식이? Because the book that I read, 돈의속성, is right here on my desk. So I'm I'm almost done. Almost done. I started late tonight because I had to do something. But yeah, I'll be finishing up on it as soon as possible. Okay, what I was talking about was supply chain issues and inflation, and they're both related. Um, because of COVID-19. Okay, okay. Because of COVID-19 happening in China, a lot of ports are locked down. So a lot of companies worldwide are like trying to take action because of lockdown and the things going around. So okay, okay, okay. Don't worry, don't worry. Okay. Hmm. And let's see what this guy says. There's a guy named Rick Newman, and let's see. He says there's some good news in the market sell-off. I'm no happier than anybody else to see a reeling stock market triggered most recently by earnings misses at big retailers such as Target and Walmart. So a lot of authors are looking at the issues with Target and Walmart, um, and they're like big retailers uh, in current era, and they're facing hardships, issues. But okay, but I'm delighted by some of the details. You should be too. One of the reason retailers are underperforming is they built inventories of goods they're now having trouble selling. Okay, they've got stockpile of goods in their inventory, but they cannot ever sell that inventory, sell their goods. They built inventory of goods they're now having trouble selling that might force them to sell excess inventory at a discount. As Yahoo Finance's Brian Chung reported on May 19, that's actually news. Here's why. Remember, like yesterday, when the biggest problem in the economy was a shortage of goods, broken supply chains. Okay, broken supply chain, shortage of goods, but they have a lot of goods in their inventory. It's just that they're managing it. Hmm. Chip shortage, jam ports, missing trucks. Any of ring a bell? One big cause of inflation, now 8.3%, was a huge mismatch between soaring demand for furniture. Hmm. Yes, Nvidia stock is expensive, but Oppenheimer says it's worth the price. In less than a week, Wednesday, May 25, Nvidia is due to report its quarter first 2022 earnings. Analysts on average are optimistic about the report itself and also about the guidance Nvidia might give. Predicting Nvidia report 43% growth to $1.30 per share this quarter and promise investors another 31% worth of growth next quarter. And one analyst thinks Nvidia could do even better than that. Previewing next Wednesday's earnings report, Oppenheimer's risk Schaffer reiterated his outperform rating on Nvidia stock even as he cut $50 off his 12-month price target and lowered it to $300. As the analyst explained, he sees upside to consensus forecast over the next couple of quarters. Not a lot of upside, however. Schaffer actually thinks Nvidia might report only $1.29 per share next week, but predicts Nvidia's guidance for quarter second will call for $1.37 per share in earnings. Currently, Nvidia's business is dominated by and about equally divided between two key areas: data centers and gaming, including both those used for artificial intelligence and for cloud computing. Sales of chips to data centers, which Schaffer abbreviates simply DC, comprise 43% of the company's revenues, mhm, and are expected to show 10% sales growth in quarter first. Gaming, which comprises 45% of the business, should grow as well, especially in quarter three later this year, once NVIDIA releases its promised Ada Lovelace performance gaming CPU. Mm. In short, NVIDIA's two biggest businesses are humming along like proverbial well-oiled machines. Billionaire Ray Dalio pulls the trigger on these two strong buy stocks. The beauty health company Skin, self-care sector, Trimble Navigation. Which top performing dividend stocks look most attractive? Ultra Group. Ultra is a big tobacco company with a towering dividend yield of 6.7%. Year to date shares are up over 12%, crushing the S&P 500, which remains in deep correction territory. Undoubtedly, Ultra is a value play, but it's one that's on the wrong side of a secular trend. Ultra Group. And the next one we have is Shaw Communications. Shaw Communications is a Canadian telecom that top rival Rogers Communications looking to acquire for $26 billion. Why I'm not worried about the stock market crash, okay? In the long run, the stock market always goes up. It's way more complicated than that, okay? We're not living in 1929. It's important to remember that as we watch the stock market crash and our personal net worth take a big hit. While that has certainly happened, it's important to note that the stock market isn't the economy. We're not on the cusp of the next Great Depression. Instead, we have a market that's spooked by rising inflation, that's also struggling with supply chain issues caused by an unparalleled global pandemic. Yes, many things cost more, including basic needs like food and shelter, as well as near basic needs like cars and gas. But while inflation has been real, that's not the full story of the US economy. We're also living at a time where the unemployment rate remains near historic low. Mm. The labor picture has for a very rare time in American history titled in favor of workers. This has led to jobs in the retail and service space, which once paid minimum wage while offering minimal benefit to offer $15 an hour. Mm. Meta and two other internet stocks to buy after the big market drop. Internet stocks have tumbled worse than the general market as investors have worried about the uh, potential for a broad-based economic slowdown, but RBC Capital Markets says the sell-off is not providing buying opportunities. The first trust Dow Jones Internet Index Fund, which tracks the performance of the Dow Jones Internet Composite Index, has declined 40% this year compared with the S&P 500. Stock market has avoided the bear, but the sell-off isn't over. Big drops could be good news if they mean that investors are bringing the market to a bottom. How to get mauled. Here's a real reason the stock market is coming unglued, and it isn't because of weak earnings. Applied Materials earnings is disappointed, while Wall Street remains optimistic on the stock. Even though Applied Materials reported weaker than expected earnings, Wall Street analysts are sticking with their bullish calls on the stock. During the company's earnings conference call on Thursday, Applied Materials management said that COVID-related factory shutdowns led to parts and chip shortages for their equipment, and the supply problems are expected to continue over the near term. The chip equipment maker reported adjusted earnings of $1.85 share for its fiscal second quarter, compared with the watch out if you're a male over 45. Anything you know about investing. Time to shop for Walmart's stock. Goldman Sachs 4 buy rated stocks for the rest of 2022 with up to 1% upside. Snowflake, Tesla, Snowflake. Many consider big data to be the next big thing, and that's where Snowflake found its opportunity. The cloud-based data warehousing company founded in 2012 serves thousands of customers across a wide range of industries. including 241 of the Fortune 500. While Snowflake shares are down a painful 57% in 2022, the company still commands a market cap of over $45 billion. The company continued to score large customer wins. It now has 184 customers with trailing 12-month product revenue of more than $1 million, compared to 77 such customers years ago. Goldman Sachs recently lowered the price target on Snowflake shares to $289, but maintained its buy rating for the company. Match Group and Bumble. Wall Street is as baffled by stocks now it has ever been. You can trade and invest in Palo Alto Networks. Here's how. It's been rough to stay long cybersecurity stock. My only two longs in the space, a space I continue to have long-term confidence in, were that one and Palo Alto Networks. For the firm's fiscal third quarter, Palo Alto Networks posted adjusted EPS of $1.79. Model, despite macro headwinds, has been a steady downtrend since May 2021. Picks. Hmm. Okay, this is it for today. There are a lot of articles, but time is up, and I'll see you guys tomorrow. Okay. Hmm.